What's going on YouTube, and welcome back to my channel. So in today's video, we're going to talk about how to utilize trend lines in your trading. I've been studying and incorporating trend lines in almost all of my trades for 4 years now, and there's only about 7 possible scenarios that can happen at a trend line. So if this video gets 30 plus likes, I will drop a part 2 for this video when it does. So first, you need to understand why trend lines work. So if we know that pivots work already, or buy side or sell side liquidity, what would connect two pivots together? A linear regression line, correct? And that's ultimately just a trend line. So if we look here, for an example, we have a bullish trend line. And why do we say it's a bullish trend line? Because as we see, trend is trending up. We have a healthy retracement or a healthy pullback, and then we get this breakout to the upside. And for an example, on the right side, we actually have a bearish trend line. Now, why is that? Because trend is trending up and we're personally just waiting for the reversal. So how you draw trend lines, it's honestly just connecting 2 points of market structure. So for an example, on the left side here, notice how we make a higher high. We don't make a lower low yet, but we do make a lower high. So therefore, for a bullish trend line, I'd want to connect the higher high to the lower high and wait for that trend to break out to the upside, because at that point, now we know trend is likely to continue back into the upside based on the higher time frame. And on the right side, we have this bearish trend where we connect the higher lows. So as we see here, we form a lower low, then price pushes up, makes a higher high, we come back, make a higher low, and then followed by another higher low. With trend lines, we're not honestly trying to predict price. Yes, you can take the retests and things of that nature, but that'll be for another video. In today's video, we're going to keep it very, very simple and only look to play the trend line breaks. The reason for that is because once a trend line breaks, there's something you will see happen every single time: displacement. Now let's dive into a couple of examples here. So here's a good example based on the daily time frame on NQ. So trend lines work on all time frames and every time frame. It's up to you to pick what time frame you are best at trading. So here we go on NQ. We're going to play one candle through. Notice how we have a body close below this trend line. Based on that and only that, now we will look to enter a trade. We will never jump a trend line, because if you try to jump the gun on a trend line and you do not see that body closure, more times than not, it's a false breakout. So as we see here, we get this breakdown and we get this body close. Now what we want to do is go down on potentially an hourly and look for the first chance of retracement. Now, why is that? Because we already know trend is about to shift to the downside. Why do we know that? Because we got a body close below the trend line. So one thing I love about trend lines most is they tell us the market structure shift prior to the market structure shift actually occurring. So as you can see here, we managed to break this daily trend line that we connected from the bottom of August 25th to the bottom of September 13th. Now, on the hourly time frame, you get much better entries. Notice how we have the same displacement, but this is based off a daily. So because of that, where is our price targets? Our price targets also have to be based on the daily as well. So let's go back to the daily chart for a second. Let's map out where our sell side liquidity is. So we have some sell side liquidity here, sell side liquidity down here. Then we also have sell side liquidity down here. We even have equal lows down here. We have our sell side liquidity targets. Now our job is to find a entry. We understand where's our price targets. Now we need to understand where our stop loss is. So because we swept liquidity from up high on the daily, very likely we have enough fuel based on this trend line breakout and this breakup structure that's about to occur on the daily, that likely we trend down to this price target, and even potentially take out the relative equal lows, all based on the liquidity grab from up here. So notice how we push up and we grab this liquidity from 696. So we sweep this buy side liquidity from 696. Notice how we don't get a body closer above, so what does that likely mean? It's a liquidity grab. How do we 100% confirm it's a liquidity grab? Well, we need to wait for this daily candle to close. Now that the daily has closed below this most recent candle low, we are now getting the first break of structure. But what would you notice? Notice how the trend line told you the break of structure first. When incorporating trend lines, I often like to tell my mentees is to look where price is coming from and likely where price is headed to before taking the trade. Now that we can see price came from a liquidity grab up top, what do we likely think price is headed to now? Well, our sell side liquidities. So let's go down to the hourly time frame here and find a better entry. So we are getting a slight bit of retracement here. I do see an equilibrium block. Did we test it yet? No, we did not. So I would look to put my entry here and look to take out these lows from down here. So right here, we have a 2-to-1 risk to reward. I tell every single trader, if you see anything above the 2-to-1 risk to reward, you take that trade 100% of the time and you don't hesitate. So let's play this out. Notice how price gravitates perfectly to our liquidity targets, right? Notice how we get our displacement, right? That's how to utilize trend lines. Trend lines will always offer displacement once a trend line breaks. Our job is just to be patient and wait for the trend line to actually break. Do not try to jump the gun. If you jump the gun, you will oftentimes pay the price. And the reason behind that is because let's say you jump the gun here and you try to short it. You see this candle live and it looks bearish. And then what happens? Notice how the candle physically closes back up on a hammer. So based on that, you just bought the exact bottom and the market's trending up now. You don't want that to happen to you. You do not want to be in that type of trade. So therefore, be patient as a trader and let the body close. It's okay to not get the best of the best entry because at the end of the day, now we 100% know where the market's going. We don't think the market's going there. We know that based off our liquidity grab on a daily time frame and our trend line break. Here we have a bullish example. So notice how price is in a downtrend. Notice how we currently are sitting at a equilibrium block. Buyers did step in. So I am seeing two things that are likely telling me this trend line is likely to break to the upside. Now our job is just to be patient and actually let it happen. Here we go. On a 4-hour time frame, I would have put my trend line here at this candle from October 17th at 10 a.m. and then connect it to October 24th at 2 p.m. So notice how we have this body close, right? So once we get the body close, that's where I'm looking to enter my position. Same thing like last time. Where's our stop loss? At the most recent pivot, right? So I'd put my stop loss here. I'd look to target these highs up here. And there we go. We have a 2.24 risk to reward. Notice how our price target gets hit and we see displacement the whole way through. That's why I love trend lines. I rather do the least amount of work to make the most amount of money. Make sure to like and comment what you need most help on in your trading, and I'll see you in my next video.